What's up, guys? Every single month for the next approximately 6 months or so, I'm going to be investing 2.4K, that's $2,400, into mostly stocks every single month for the next 6 months. That brings my average investment to around $4,000 per month due to a lump sum investment I made into alternative asset class, which is Pokemon cards. But today's not about Pokemon cards. Today is about investing into stocks, and I have been watching some stocks very, very closely, and spoiler alert, I've been looking at Alibaba, where a lot of traditional investors are running away from Chinese, especially Chinese tech sector. They're running away because China's been doing some shenanigans. But the price of Alibaba, and again, you're not supposed to make decisions just based on price alone, but the price is very attractive to me, someone who's been watching this stock for a very long time. So Alibaba right now is trading for 2017 prices. To me, that is a very rare opportunity. It is scary. It's very scary, and I definitely feel like not too comfortable going all in on Alibaba, but at the same time, it's only going to be one stock out of the 41 plus stocks that I own. So I'm going to switch the screen right now to my watch list, and you guys can check out my watch list with me, and I'll be just reviewing what I think is a good buy. I'll probably be buying one or two index funds today. Probably a couple individual stocks. Some of this may not be surprising what I'm about to buy because you've been watching for quite some time, and I've been talking about for the past month because I usually look at stocks every single morning for about 2 minutes, and I've been doing this since summer of 2015. Every morning I wake up and I go through my watch list. So my watch list has been increasing. There's I don't even know how many stocks are on my watch list anymore, but there's probably 100 plus stocks on my watch list, and I usually only buy from my watch list. So this will be really interesting. You guys are gonna check this out. Hi, Fly Girl. 19, the balls of steel. I don't know about steel, but definitely Bitcoin. So here we go. I'm gonna switch over to my watch list, and I use Yahoo Finance, by the way. I love Yahoo Finance. I just actually studied the company Yahoo, and a very interesting story of how it tumbled down, no pun intended. Right after they bought Tumblr, things did not look too good. But anyways, let's check out this watch list. So we see that Robinhood is still trading at half of its peak, and I'm staying away from Robinhood because although the company is doing some amazing things, making investing inclusive, I think there's a lot of speculation right now. When you're buying something for IPO prices, within a year there's going to be a lot of turbulence, so I'm staying away from anything like that. But I did place it on my watch list because I'm interested what will happen to Alibaba. Not Alibaba, whoa, Freudian slip, to Robinhood. Let's go a little bit lower right here. Let's check this out. I think this is the Hershey Company. So let's open it up. I'm probably not going to be buying Hershey Company, even though this is very, very classic, and I love buying classic companies. I think classic companies like Lowe's, like Coca-Cola, are very underrated considering their power of passive income production through their dividend. We see a 2% dividend if we buy Hershey's right now. It's not bad, but let's look at that price history. Again, it's one of those heavy hitters that have been kind of steadying up, but I don't know too much about Hershey's. I just added it to my watch list to kind of motivate me to learn a little bit more about Hershey's. So let's move on over here. We see it is trading near all-time highs, which is amazing, but what company isn't? Those are the companies that I'm kind of looking for, the companies that people are running away from right now, and I think when people are afraid to buy something, that might be the time to actually make and open up a position inside of it. So let's keep going over here. We got the ARK funds, right? This is ARK Growth, I believe. Oh, sorry, that's not ARK Growth. This is ARK Genome, which is one of my favorites. But instead of buying this ETF, what I like doing is buying the companies inside of it, so I skip paying the fee. So check this out. ARK, you can actually check out its positions. Let's see, where's that? Holdings, right over here. And you could check out what's inside of ARK. And again, this is Kathy Woods. She's an amazing, amazing investor. And she's been kicking butt for a few years now and really rose to a lot of fame with these ETFs that she has created, her and her team. But if you look inside of this, you can see that it's mostly healthcare. And you could even see the top 10 holdings. And there's CRISPR. Wow, CRISPR actually made it to the top 10 holdings. So why the heck would anyone pay the fee for Kathy Woods and her team to manage this when you could literally buy these stocks that are in here and kind of manage it on your own? CRISPR is something that I've been talking about for a number of years actually now, and I personally do hold CRISPR, so I am a bit biased. I think it's a fantastic company with a lot of potential. Someone's asking, by the way, if you're watching this on YouTube, I'm going to be responding to Instagram live questions. So someone's asking, if your arm was a baguette, would you eat it? I mean, if your arm was a baguette, why would you not eat it, right? Okay, so I'm definitely not buying any ETFs, no ARK. I own 0 ARK, and part of that is because I don't want to pay the expense ratio. Jamie is asking, do you have to pay a fee for buying stocks? No, you don't have to buy a fee if you're buying stocks in the United States. In the United States, trading is free, and if you're paying for trades, there's definitely a problem if you live in the United States. So switch brokers if you're paying a fee for buying stocks. I do believe that it is better to buy those individual companies, and because of Fidelity and Robinhood's fractional shares, you could simply buy, oh my gosh, you could simply buy pieces of it. Wow. I know someone I've been messaging went really hard on GameStop. This is amazing. Again, this right here, you're looking at 3 years of profits in a single day. Oh my gosh, I gotta click this. GameStop just skyrocketed by a fourth. Unreal. This does not happen often, even though it's been happening more and more as of late. This is some crypto growth. There he is, JPO Styles. Like I was just talking about you. I know you're really excited by this 25% gain, and it's just going up and up. I'm definitely not touching GameStop. No offense to anyone who is. I think it's very, very volatile, but I know my friend right there who just hopped on the live is definitely very, very happy seeing this, placing a bet on GameStop. Amazing stuff. Again, I'm all happy for people who profit off of meme stocks. I want people to, grow wealth. However, personally, I don't like messing with meme stocks. Wow, 26%. Whew. It's just going up and up. Will it hit 30% by the end of the day? I don't know. Send some heart. Oh my gosh, maybe it'll hit 30% by the end of this minute. What is going on? This is unreal. Wow. GameStop is, and you can see the volatility here, right? So this means there's, not volatility, the volume. The volume is really, really high because it is updating every couple of seconds, meaning people are buying and selling. So there's a lot of day trades happening. If you look really closely, let's zoom into this graph. This is all today. We see some opportunities, like people probably bought here, definitely some sold here, and you're literally making like $1 a trade. But if you have tens of thousands of dollars or hundreds of thousands of dollars, and probably millions, you are making some money here, but this is very dangerous stuff. I mean, the real winners are people who did this 6 months ago, right? Are they? I don't know. Actually, yeah, they are. They're pretty big winners. But if you bought anywhere on the big jumps, you're not in the clear yet. Year to date, wow, look at that big spike that GameStop had a while ago. I know some people that bought in here, and they're not doing too well. They are not doing too well. But if you compare the price to 5 years ago, it's just an amazing opportunity. So there it is. It did not keep going up indefinitely, so definitely some volatility here. Again, I'm not touching GameStop. I'm staying away, but all the power to you if you are involved in these meme stocks. I hope that you become wealthy and retire in a year. Seriously, this is some amazing quick growth. Let's get back to my watch list and see what's going on down here. Sony, one of my favorite companies, Sony, is still recovering from the 90s. Sometimes the Yahoo Finances refreshes. That's why I don't own any Yahoo stocks. But Sony has been actually still healing from the dot-com crash. So Sony is still healing from the late 90s. Also, Sony did get hacked in, I believe, 2006, so it's still healing. Is Sony a good buy? I think its price is fair. I think Sony has a pretty fair price compared to all the other tech stocks right now. Again, Sony is not even at its all-time high, which was in 1999. So over here we see a lot of volatility happen. Yep, around 06, 07, definitely 08, that crash. really took Sony down a whole lot, and Sony is still out there, still making PlayStations, updating them every few years. I think Sony is a household name. Will it continue to be a household name? I'm not sure. It's not at all-time highs, and it's not even at its 52-week high. Very interesting stuff. Paying out that 0.54 dividend. Full disclaimer, I do own some Sony stocks. Not a big position, but a decent-sized position that I plan on holding for the future. So just talking about that. Let's go a little bit lower. I believe my Sony position has at least doubled since I have purchased it. So even though Sony has not recovered, a lot of people would argue that tech stocks are overvalued right now. And in fact, the move to be making is buying value stocks. Value stocks such as Alibaba, even though that there is a lot of mystery behind what the Chinese government is going to be doing. Speaking of value stocks, if you don't want to make decisions, you could just buy VOOV, which is a value index fund. So instead of buying the top 500 companies, you're buying value stocks with VOOV, which is pretty radical. I'm just going to check the time to make sure I have enough time to place orders. Yeah, there's still time left. So let's go a little bit lower. This, by the way, is an emerging markets ETF, which has access to the Chinese markets if you want to take that risk. Definitely very dangerous right now. A lot of key investors are moving away from China and the Chinese market. I think it is a time to actually be moving in, just as a little hedge in case the industries are wrong and in case the institutions are wrong. I think making maybe a 5-10% position, not pushing it past that, could be a very interesting move that could pay off. That's certainly what I have been doing. And full disclaimer, I could be making mistakes, right? And when it comes to investing, we see greats like Cathie Woods and Charlie Munger making two separate decisions. Charlie Munger invested $34 million into Alibaba, while Cathie Woods sold all of her positions in Alibaba. So we could see how two great minds from about 3 decades apart have looked at this whole investing thing very, very differently. Cathie Woods, by the way, she wants people to be happy today. Charlie Munger, well, he wants people, his whole investing style has been, I'm going to invest for decades. I buy and hold. Cathie Woods sells, and it seems a lot more hype-based. No offense to Cathie Woods. She's definitely a lot smarter when it comes to investing than I am, and I'm sure there's something that I'm not seeing, but it does seem like she is trying to build hype in the moment. What's up, Monica? How's it going? I hope you invest in. Let's keep looking what's going on. Funko Pops. A lot of folks are interested in NFTs. Funko Pops has some exposure to NFTs. I believe they're opening their own NFTs. So I did create a position in Funko Pops. And good luck with Funko Pops. Again, pretty volatile. But this is a creative way to invest in a new technology without actually investing in the new technology directly. Coinbase is about 40% down from its all-time highs, which was around $420, $410. This could be a very interesting buy, but we have no idea if it's gonna last. Again, there's a lot of competition being created for Coinbase, and I don't think that Coinbase is buying their competition. And for those of you who have been just living in a capitalist nation for a while, we know that if you don't buy your competition, sometimes your competition grows to eat you. Yahoo had a chance to buy Google or even be bought out by Google, and both times it was a no-no. Blockbuster had a chance to buy Netflix for $95 million, and Blockbuster said no. Did anyone think Blockbuster would lose to Netflix? I don't think so. Blockbuster had all the money, all the household names, the name recognition, addresses all around the United States, a world-famous company, and it failed to buy Netflix. And I think at the time, it wasn't a bad decision not to buy Netflix, because whatever Netflix did, Blockbuster could just do. Well, history turned against Blockbuster, and now it's just a memory in our 1990 kids' minds, and everyone else too. So over here, let's see. It Capital is giving me compliment. He's saying, my man here is the only dude in the world who could spit bars, talk finance, and pull off the straw hat. I appreciate that. I'm not sure I could pull it all off, but I pretend I do for sure. Bumble, the only competition to Match. By the way, Match owns Tinder, OkCupid, and obviously Match. Bumble has been the only competitor. It just IPO'd. I do own some shares of Bumble, and let me just tell you, it is not going well. But a 4% gain is very, very strong, especially for a single day. day. Honestly, like 4% does not happen very, very frequently. But I have seen Bumble doing that a little bit more. When is the To the Moon remix hitting Spotify? There is a To the Moon full song on Spotify. I don't know who told you about a remix, though. If you guys are watching this on YouTube, by the way, oh wow, cryptocurrency definitely down today. If you guys are watching this on YouTube, by the way, I am responding to people's comments on Instagram Live. So that's whenever I like start talking about something off topic, that's why. So let's go. Oh my gosh, crypto really got hit here. Wow, Ethereum down 4%. I mean, it's been a good run-up, so I'm not complaining. I purchased Ethereum for $900 and watched it go all the way down to about $150, and I didn't sell. I didn't buy more. In hindsight, I definitely should have bought more cryptocurrency, but who knew? Who knew if this technology would last? I definitely wanted to invest one time and just completely forget about it. So let's see over here. Monster is, what's this company called again? Hold on. MicroStrategy, my bad. MicroStrategy is heavily invested in Bitcoin, and its price is correlated, and we see today that the crypto market is down, and coincidence, so is it. Very interesting here. We see, woo, yes, baby, wow, these meme stocks are firing off the top. We have BlackBerry up almost 10%. Again, BlackBerry is a company that, I mean, Obama rocked their phone, and that was not enough publicity. Now, I don't care if you like or hate Obama, but if a president is rocking the phone and kind of like, you know, stunting with the phone, that's going to be a really, really, really big boost for the company. Free advertisement, basically. Shout out to Sienna. What's up? How you doing? Wall Street Junkie. Anyways, yeah, BlackBerry. Very interesting how they fell off. They're more a kind of a tech company. I just got an update, by the way. AMC is up 30% almost today. That's phenomenal. I did sell AMC at the 60s. So let's keep going a little bit down. What's going on here? Kirkland, again, this company would have given you times like 40 returns if you had bought it about a year and a half ago. People really underestimate these stuff. Yo, Valerie, I'll see you later. Yeah, I'll see you in the investing group. By the way, Valerie is someone who is part of my investing course. So if you guys want to join that, definitely send me a DM and I will send you a 41% coupon code. We talk about all these things and it's definitely slowed down. Six Flags is a stock that I bought up 6% today. Really happy about that. Let's click the chart for Six Flags. Let's see what's going on here. Again, individual companies are very, very dangerous to buy, and if you guys don't understand the danger of, wow, BlackBerry is up 11.34%. How do I know that? I have a microchip implanted in my brain, so it sends me signals every time the stocks that I'm watching go up 10%. So that's what Illuminati confirmed. No, I get notifications through Yahoo Finance, which again, I wish they would promote me. I mean, not promote me. Illuminati promote me? Oh, I'm slipping. I'm glitching all sorts of ways right now. But the moral of the story is I made a post today of how 30 years ago, companies that existed and were top dogs, well, how many of them are top dogs today? Maybe 2 or 3. So the Google, the Facebooks, the FANG stocks, FANG stands for Facebook, Amazon, Netflix, Google, how many of them are still going to be around and in full power in 30 years? Probably none of them. Right? Yet we assume that they're going to be here forever. And evolution and stocks, they work hand in hand, right? The dinosaurs reigned for 100 million years and then, or more. I'm not a dinosaur expert, but it took only about 1 day to wipe out nearly every single dinosaur. So when it comes to these big old companies, it might just be 1 day where we see them all disappear or lose a lot of their power. And I'm very, very nervous. I'm not nervous, but I do foresee a collaboration between Republicans and Democrats in the United States and the Chinese government when it comes to regulating these tech companies and breaking them down because they judge them as monopolies. So be very, very careful about investing in individual stocks. And if you want to, by the way, someone's saying, how do I buy stocks in dinosaurs? Actually, I do have an answer for that. Tommy Berry, I know that is kind of like a joke question, but you could go to Rally Road and you could buy pieces of dinosaurs. No lie, these dinosaur skeletons do go up in price, and it's an alternative investment class. You can actually buy pieces of dinosaurs, skeletons. Pretty cool stuff. So a lot of like billionaires probably own a dinosaur skeleton. Not everyone, but there's definitely some skeletons in people's closets. But yes, people say big tech is in the hands of the Democrats. A lot of left-wing Democrats, right, that are further away, like the Bernie Sanders, the Elizabeth Warrens, they're actually very anti-big tech. Very anti. And we do see that it seems like the political ideologies is more aligned with the moderate Democrat, like the Joe Bidens and all that. I would say Joe Biden is closer to the right than he is to the center when it comes to, I guess, progressives. You can't really call him a progressive. I think a lot of left-wing people really dislike Joe Biden and do not trust him. And there's this really strange alliance that could happen between right-wing kind of freedom of speech people and Democrats and left-wing people who are fearing monopolies and big businesses. I think an alliance is going to come forth if they could look past this, and big tech is going to be in danger, in my opinion. That's why it's very dangerous with these Apples, Facebooks, and Googles. And full disclaimer, I do own the Facebooks, the Apples, the Googles, not Google, but I do own Facebook and all these other companies, and it is something that I'm aware of, that there could be a big old crash because the political institutions align. And we certainly see that happening in China, which is closer to communism than I think anything. And in fact, they do identify as a communist state that practices Adam Smith's kind of capitalistic principles, right? So when it comes to these capitalistic principles in a communist ideology, it's a very interesting thing because no economy in the whole entire world grew as fast as China's in the last 30 years. And we see a lot of their stocks kind of in American portfolios. And that could be dangerous because what if China decides to regulate these companies even further? For example, they just released a new law targeting a lot of the information that these big companies have on individuals and limiting that and having them go through a lot of hoops to have these this information. And a lot of people, you know, in even in the United States, they're like, I don't want Facebook knowing this much about me. This is not right. So China's kind of like, you know what, we're not going to vote for this. We're just going to do this. So that's why we see a lot of big tech in China crashing. And that's why I think there is an opportunity here to buy, because at the end of the day, I do agree with one of the most brilliant investors of all time, Charlie Munger, who is partners with Warren Buffett. And he bought, again, $34 million worth of Alibaba despite the Chinese regulations, because he believes that at the end of the day, China, even though it's a communist state and he would rather live in the United States, he believes that China does not want their economy to suffer. They do want people motivated to create new businesses, and they're doing it their way, and their way is working for them. So that's why I am very eager to buy a few shares of Alibaba today, despite the price skyrocketing today, and that sucks. I wish that I bought yesterday, but I stick to my behavioral principles, which is buy every 24th, and I buy every 24th because my grandma was born July 24th, 1930. So that way I kind of have to stick to my system no matter what. That is the hour, which means it's 12 o'clock, so I have about one more hour to purchase. I will be purchasing definitely before the hour is up, and probably a lot closer, so people here kind of watching what I'm going to buy, don't be like, oh my gosh, I have to stay here for so long. And if you do have to go or something, this will be uploaded to YouTube. If you're watching this on YouTube, don't forget to like, comment, and subscribe. Wow, Robinhood just doubled since we started this. This was up 4%, and it's already up almost 10%. This has been a gnarly day. By the way, congratulations to the NASDAQ, $15,000, first time in history, amazing stuff happening. Again, almost a 4.5K S&P 500, Dow Jones at 35.4. This is an amazing day. Green Day, shout out to the band Green Day. By the way, 2000s music is, guys, it did it. Oh my gosh, GameStop 30%. We were just talking about this a few minutes ago. It was at 24%. So honestly, in these few minutes, you could have gotten a year's worth of investment if you bought GameStop in your retirement accounts, because you pay no taxes there. In just a few minutes, a year's worth appeared. Again, I stay away from these meme stocks as much as I can because I'm here for the value. I'm here for long term. But some people, they want their money now. And congratulations to you, because you just made, with 30% increase in GameStop, what is that? That's like 5 years? No, that's more like 3 to 4 years. 4 years of investing in a single day with these meme stocks. I can't believe it. I can believe it, because the stock market is here to serve the people, and I think this is the greatest transfer of wealth system that exists, because the stock market does not care if you're white, black, Asian, gay, straight, rich, poor, it does not care. If you sell your stocks, you sell your stocks, and anyone can buy them. In 2020, I believe one of the greatest transfers of wealth actually occurred, where a bunch of millionaires were selling their stocks to preserve their value, and guess who bought them up? Me. But no, a lot of average folks were buying up stocks during the last year, and their money has doubled or tripled since that point. So that is a transfer of wealth. So I wonder what Karl Marx, the founder of communism, would think about the stock market. Ironically, this capitalistic tool is transferring wealth faster than, I would say, any like communist revolution that could happen in the streets today. This is phenomenal stuff, and it's sustainable because it's so slow and it's knowledge based. So ironically, capitalism has this tool to transfer wealth, and that's beautiful to me. And again, like, capitalism has many flaws, communism has many flaws. I care about doing the best in the system that I live in and always improving it. So I'm not saying that capitalism is better, but I am saying that it has a lot of qualities that are better than communism. And a lot of qualities of communism. China in 3 decades outperformed on a growth scale, like growth-wise, every capitalist nation that exists. So a lot of pros, and I think part of growing on Earth is learning that let's not become addicted to our ideologies, and let's learn to switch and use frameworks and borrow from one another and study history and see what works and what does not work. Because obviously the Soviet Union, where I come from, communism did not work that well there, but it did have a lot of great features. The community, there was no such thing as homelessness, right? But you did have to wait in line for like an hour to get bread. So you know what? How about let's get rid of the homelessness and not wait in line for bread? I like the best of both worlds. We see more Chinese companies over here skyrocketing. Financial Professional says capitalism, baby. We see Dick's Sporting Goods. This is one stock I regret not buying. Dick's Sporting Goods has performed amazing in the past 2 years, going from, I believe, $25 all the way to $115. Dick's Sporting Goods is one of the last few that do exist. That's like a storefront that you could go and get some professional help when it comes to sporting equipment. We see it going from $45 all the way to $116. That is phenomenal growth here. And if we look at the max history, pretty impressive there. It's skyrocketed recently with COVID and a bunch of new people's hobbies, right? This is where sociological investing comes in, because someone who's just looking at the numbers and not the sociology is not going to recognize this moment right here, this opportunity where you're going to have a stock go from $21 all the way to $115, because the numbers don't show that. No one looking at the numbers would expect anything like that, and that's why a lot of people miss this opportunity in Dick's Sporting Goods. So Financial Professional is asking, do you own China stocks? I'm not a fan because fraud is rampant with numbers, and they likely won't be prosecuted in America if they lie about financials. So yeah, I do own an ETF that's exposed to emerging markets, including it has shares of Alibaba inside of it, and I'm about to purchase some shares of Alibaba today, and I am okay taking that risk, knowing that it's just one out of maybe 40 to 42 positions that I own. I don't think that China is going to sabotage their own success. That's what I'm betting on. Alibaba is a symbol of Chinese success to the whole entire world. Yes, they're going to be harsh on it, and if you talk bad about the Chinese government in China, you're going to have a bad time. But at the end of the day, I do believe China wants to succeed. So I am going in for these Chinese stocks, and I'm not exposing my whole portfolio to it. I know a lot of people are like, oh my gosh, like, you're going in on China. I'm like, maybe like 2% of my whole portfolio is China. Okay, 98% is, there's Nintendo, which is Japan, but a majority of everything I own is United States based, and I want to diversify to other sectors. Are you kidding me? Guys, this is unreal right now. The market just pulled back really hard on these meme stocks, and we see that AMC was up 30% just a second away, and now it is down 18%. So people who just bought this just lost 2 years of investing. The symbol for Alibaba is BABA, Baba, which is how you say grandma in Russian. What do you think about stocks investing in real estate? So yeah, if you buy a stock like McDonald's, you're buying real estate and fast food. But ultimately, McDonald's can be looked at as a real estate company as well. I think there's REITs that you could be purchasing that have exposure to a lot of real estate and breaks real estate down by different sectors. And if you guys are enjoying this type of material, I do have a YouTube channel, link in my bio, where I post videos like this, and it's a lot slower and broken down, unless you're watching this video on YouTube right now. This is definitely not slow or broken down. Kudos to you if you're keeping up with the speed. And I also have an investing course that you could purchase, and there is a big sale happening. Oh my gosh, how is Carnival Cruise up right now with the Delta variant coming up? People who got vaccinated, about 27 of them were found on a Carnival cruise ship with a positive COVID test. So this is amazing that this is up today. Like I was saying, I do have a investing course that you guys could sign up for. It is definitely does not start as advanced as this, and it starts off a lot more foundational, and it builds up on those tools, and it gets to a point where it's like, we can keep up like this. If you finish the whole course all the way and join every single Zoom night where we are talking in small groups about stocks, investing, and a lot about behavioral finance, because most of this is your behavior. You can ask any great investor. 90% of investing is analyzing your own behavior, and 10% is picking the right stocks or picking the right companies, or even not even picking anything at all and buying index funds or alternatives. Earlier we were talking about investing in dinosaur bones, right? You can invest in anything, but 90% of it is your behavior. So Jenny is asking a great question. Jenny, I believe you're actually part of my investing course, right? I'm not sure if you're that Jenny, but I believe you are. So hello, I was wondering how much of Coca-Cola you own. I want to start with a good dividend since I'm already investing in the S&P total market. Okay, let's check out what's going on with my Coca-Cola stock. So keep me logged in, and it's in my Roth IRA. So I will show you guys a piece of my Roth IRA right now. Financial professional spitting some gems right there in the comments. So let's see, where's Coca-Cola? This is my Roth IRA. There it is, Coca-Cola. So I own about 11% of my portfolio in my Roth IRA is Coca-Cola. I own 40 shares of Coca-Cola. That is a total of, let's see, $2,241 in Coca-Cola. Some of you guys are wondering, what the heck is that 40% position? Almost half of my Roth IRA is one single stock. So what the heck is it? It is Nike. Nike is about half of my investment portfolio when it comes to my retirement account outside of my 401k. Over here, I know you guys are seeing some major numbers. These are small experiments that I have committed. Even though it is up 652%, it is a very, very small amount of money that I invested, relatively speaking. About how much percent of my portfolio is this? This is about 2% of my portfolio? Yeah, about 2% of my portfolio is these companies that are up 605%. Which one is that? Oh, that's Overstock. Yep, Overstock. It is about 3% of this portfolio. I do have Overstock in another account where it is up over 1,000% or 2,000%, and I have Overstock in a third portfolio where it is up significantly higher as well. But this TED Talk is not about Overstock. I do have a whole entire video on Overstock that you could check out. Financial professional is saying, hey, I bought a rock the other day. I'll honestly buy anything Rally rolls out. Yeah, so Rally is a really great platform where you can purchase alternative investments. And by rock, I'm pretty sure you're talking about a meteorite, right? You could buy a piece of a meteorite or whatever it was. Lots of really cool opportunities there. So with that, like, this is just bonus right now, but this is my Roth IRA currently. Nike, Twitter, Coca-Cola, Verizon, Bumble, Under Armour, Boeing, Overstock, SoFi, Farfetch, Hannon. This is a REIT, by the way. Someone asked about real estate investment trust. This is exposed completely to real estate, and they have to pay out 90% of their profits in the form of a dividend. And the really cool thing that happened here is it actually skyrocketed itself, almost doubling in price. So even though I'm collecting that dividend, I am also buying REITs that could go up in price. And of course, I do have losers, right? I have PG&E right here, and it's down 45%. So I do have losers here. You don't have pure green all the time, but the more that you invest, you know, the more likely you are to hit greens, especially if you're buying blue chip stocks, especially if you're buying index funds. So let's get back to today. I have a few more minutes to finally decide to purchase a stock, and we saw that GameStop and all these stocks are going down pretty hard right now since we started talking, which is interesting, right? GameStop is already at 25% over here. Yeah, and we just saw it at 30%. Yahoo is loading once again. I know Financial Professional, you told me check out JMIA. I am totally okay with even buying both, and I will definitely add that to my watch list. So that'll be very interesting for me to check out. But today I am very hard on BABA, and I am okay if it goes to zero, because ultimately I am diversifying my portfolio, and if one of my stocks goes to zero and it gets delisted or something like that, I will be okay. So let's see what's going on a little bit further on. What is this? Best Buy. Best Buy skyrocketed. They had a really good report, 9% up. I do believe I own some Best Buy shares, so really happy about that. Let's go on a little bit lower. This is a gem. Edit. I did buy it for about $20 or so, maybe a little bit higher, my bad, maybe around $30. This is a biopharmaceutical. It is part of ARC-G, which is what we started this TED Talk with. ARC-G is somewhere over here. It's about genomes and kind of biological, pharmaceutical biology. What do you say? Biopharma. So Edit is one of those stocks that's in there, and I am holding Edit, full disclosure. Sense is one of those stocks that I've been, wow, it's $3.70, amazing. I actually bought Sense at 35 cents or something like that, no pun intended. That's all about diabetes and diabetes technology. Let's go, we already passed that. Square, I've been holding Square for quite some time. We see Google is kicking butt at 2.8K. Overstock's having a nice day, and there's Baba. There's Baba. It's unfortunate that Alibaba is up 6% today, or rather fortunate, but let's take a look at the chart for the past year. Alibaba is not doing too well, relatively speaking. So let's look at the last 5 years. Alibaba is basically in the same exact spot where it was. Low Poppin', my guy. If you guys are interested in alternative asset classes, definitely follow Low Poppin'. He talks all about rare Pokemon cards that skyrocket in price. I'm sure he's actually a real estate investor. 90% of his investments, maybe it's a little bit less now because I'm sure a lot of his Pokemon cards skyrocketed, but I learn a lot about Pokemon cards when it comes to Low Poppin's page. So definitely a great guy to talk to, and very supportive of people just getting into the Pokemon trading card game, and especially the investing side of it. A friend named Mike, Med Mike, is saying made money on Sense. I really like that you made money on Sense. By the way, Mike, how much did you invest in Sense, or rather, what percentage of growth do you have? When did you buy in? I'm very curious about that, because Sense is definitely a sleeper. You don't see people talking about it. But again, follow Low Poppin' for those really low population Pokemon cards that are exclusive. He has some gems for sale on eBay right now. I'm eyeing them myself, but I probably won't buy them because I have to stay disciplined to my financial freedom plan, which I already have a lot of exposure to Pokemon cards, but if I see a good deal, I will definitely buy it up if it's a card that I really, really like. So Alibaba has not been doing well, and that's due to the regulations. We see over here it peaked at about $304, and it is about half of that right now. So yes, I am going to be buying this, and I expect this to be able to go as low as $90. And I'm saying $90 because it's very possible that there's at least a 50% plus correction on this, especially if we go into some sort of a market downturn, which is pretty expected to happen every couple of years. And because we healed so fast, I would not be surprised if the next one comes a lot sooner. And once that market crash comes, I do think Alibaba will be even cheaper, because the fear in the United States that'll come from a market correction, combined with the fear of Chinese regulations, might push this past, might make this drop faster than anything. But with that, I am very brave, and I will be buying Alibaba today, and you guys can watch that happen. But I'm gonna look through one more time if I missed anything, because I believe I also want to buy Hasbro. Hasbro is a toy company, and they're exposed to a lot of really, really cool games like what is it? They're exposed to what was it? Transformers, Magic the Gathering, My Little Pony, Death Row Records, Peppa Pig. So Hasbro is definitely a household name, and it's going to be here for a long time, in my opinion. Hasbro also benefited from the pandemic, where even though a lot of toys were delayed and it was hard to get supplies, we saw the same thing happening to the Pokemon company, and Pokemon, because supplies were hard to get, actually skyrocketed in demand. And of course that's not the only reason, but that is one of the main reasons Pokemon cards skyrocketed. Toys, collectibles, you name it. And I think that transferred to the NFT boom, where we see NFTs that were given out for free selling for $160,000 just 3 years later. In June, Mike, wow, you bought 400 shares at 1.7, sold at 4.5. That is amazing returns. Amazing returns. Congratulations, Mike. That's a big win. Phenomenal. I sold half of my shares, so I am still holding on to half of cents just in case. They're lower than you sold them for. So he's talking about cents, which is all about diabetes technology. Mike, maybe you could explain that better than me if you choose to. Looking a little lower, we see airlines are up today. That's very interesting. Unfortunately, Berkshire Hathaway used to be somewhat of an index fund for airlines, but they have sold a lot of their airlines, so it's no longer like that. Nothing interesting happening here. Amazon has been very, very slow this past year. I think it's exactly where it was a year ago, so not much happening with Amazon. Of course, Jeff Bezos did leave the company as the head honcho, so there's that to consider. Macy's up 4%. Amazing. Macy's' comeback has been unreal. Let's see what's happening a little bit lower over here. Nvidia, Facebook, wow, what a surge, what a surge. And finally, the original stocks that I started watching. Apple was the very first stock on my watch list. Restoration Hardware, Nike, Disney. If you had bought all of these in 2015, man, I think $10,000 might be something like $50,000 today. Really unreal stuff. Potentially even more. Bree Loves Less, you're asking what list is this? This is my personal watch list that I created in 2015 and have been adding stocks to it every now and then, actually, for the last 5 to 6 years. So that's what this list is. It's my personal watch list. I look at it every single day. I'm going to look at one more stock right here, which is Hasbro. Honestly, I think I'll just be buying a little bit of Hasbro today because it's a sleeper. It's definitely a sleeper. It's nothing alluring. People are actually a little bit afraid to buy it. I do think the growth potential is not that high for Hasbro, but it does pay a very nice dividend, and I want to build that passive income that'll keep reinvesting into Hasbro. So if Hasbro does go to the moon or crashes, this dividend will be putting in work and buying more pieces of Hasbro. So I'm really happy about that being a possibility. So I'm okay if it goes down, I'm okay if it goes up, and I like to diversify my portfolio in these not so sexy type of stocks, but at the same time, I do believe Hasbro is a very interesting choice. This is Yahoo Finance, by the way, where I build my future portfolios. So with Hasbro, I think the exposure to Magic the Gathering, the exposure to Death Row Records, the exposure to Peppa Pig, the exposure to Entertainment One, which is video streaming, I think Hasbro is gonna be in a position to make some really big moves, and in fact I think it'll have assets to sell in the future to fund what maybe an even better dividend payment or research or expanding in new plateaus. I think also Hasbro is scheduled to release Transformers, My Little Pony. How do you get My Little Pony and Transformers confused? But Hasbro is scheduled to release My Little Pony collaboration with Netflix, as well as a Magic the Gathering collaboration with Netflix. And we see artists like Post Malone really getting behind games like Magic the Gathering. So I think it's a matter of time until Hasbro has some heavy marketing tools under their disposal and going really, really hard, especially with people like Post Malone, who is one of the #1 artists in the world right now. And it's amazing to say that because just a few years ago, in 2015, no one knew Post Malone's name. And when it comes to a lot of these stocks, I think it works the same way. If you guys have enjoyed this so far, definitely check check out my investing course, link in bio, but DM me for a 41% coupon, and we could get you started. The course comes with a number of modules building foundations, and then it ends up with you knowing how to tax loss harvest if you choose to use those strategies. So if there's a market crash, you could sell your stocks, write it off your income at a loss, and then buy similar ETFs back. You can learn how to use your retirement accounts where you could actually flip stocks inside of them, or you could buy and hold and, probably retire with hecka money. So that's all part of my investing course, and my favorite part of my investing course is Wednesday nights. We have Zoom sessions where we all talk together about different concepts when it comes to the world of investing, from the 1930s market crash and why it wasn't as bad as history books may have it remembered, because it's all about heuristics and looking at the market crash in terms of 1930s perspectives. So anyways, now I'm about to buy these stocks, and I'm going into my brokerage account. So I'm going to keep the screen on me because there's some private information there. But I'll show you a real quick glimpse of the brokerage account. We see over here, we have some really big gains happening. Again, this is years of investing, about 6 years of investing, and me being very, very consistent every single 24th. And today is one of those days where I continue my consistency, and I'm investing another $2,400 into the stock market. And this is my plan to retire by around, or at least be work optional by around 2030. It might be 2031, 2032, 2029, but around there is when I do plan to hit that work optional lifestyle. And really, to hit that work optional lifestyle, I could do it sooner. I could do it within 7 years if I choose to do the bare minimum, which is have my investments only pay for expenses. No fun stuff, no trips or anything like that. I could retire sooner with $780,000, paying about $2.6K for basic needs. And in that way, a capitalist tool created an almost communistic lifestyle for me. I can't get past like the similarities between capitalism and communism. I think that's a theme in this live. So I am buying BABA, and you can actually, I need to transfer money first, and you're about to see this whole process. Just give me a second as I transfer this money, and you can see how I actually buy these stocks if you're curious in learning how it works. I'm using an outdated brokerage, which is Merrill Edge, but it does look exactly the same when you're on your other when you're looking at your other what's it called? Brain fart. Big brain fart. I've been talking for too long, lost a lot of oxygen. So without further ado, let me just transfer this money real quick, and then we can talk a little bit more, and you can see $2,400 is being transferred. Okay, so there we go. I'm going to show you you know what, just in case there's sensitive information, I am going to, I know some people might want to watch this, but I am going to hide some personal information here just in case. So I don't think anyone's going to hack me or anything, but you never know. Illuminati might be watching. So Illuminati, if you are watching. Okay, here we are. So this is where I actually buy and sell my stocks. Let's click buy. Oops, that's sell. I had one job. And I'm going to be typing in BABA. So let's see if it pops up. Nope. B-A. There it is. Alibaba Holdings Company. What made me interested in stocks is being asked below. I think the ability to live work optional came to me way later as a realization. What it really was is how little work it takes to buy a stock. Literally, I'm pushing buttons on a keyboard, and I was standing at a restaurant making like $15 an hour or something like that, and I was like, you know what? I don't want to be doing this. I want to be investing in stocks because that's a couple buttons I'm pushing. So I went ahead, and every single dollar that I was making at the restaurant, doing parties for kids, behavior analysis with children on the autism spectrum, I started investing a piece of every single dollar into the stock market, and I saw huge losses, actually huge losses when I first started, but I kept going, and eventually it turned a profit. And I think what gave me a lot of certainty in investing is me playing games like Yu-Gi-Oh! Way before, where you could predict sometimes what kind of cards would go up in price, and I would buy those cards and then wait, and then I would sell them a few months later for a profit. So that kind of got me thinking about stocks when I learned what stocks were, mostly through podcasts while I was driving around. So someone's saying, nah dog, don't buy BABA, buy Tesla. You missed the whole the whole live by coming in now, my friend. But Tesla is something I didn't talk about. I do think the price is a little bit too high to currently be buying it in. But you know, if you're buying it for the long run, you're buying it for the long run, and that's great. I'm gonna buy right now about 15 shares of Alibaba. So let me calculate how much this is gonna be. And there's a cool calculator right here where it lets you do the basic math. So that's about 8 shares of Alibaba. Is that right? 8 shares of Alibaba? Okay. Let's do this. 3 chips and a chair. Should I convert my 401k into a traditional IRA and then into a Roth IRA? Well, if you're still working at that company, I don't know if you can do that. But if you have left that company, personally, that is what I would do. I would put it into the Roth IRA, paying those taxes, because now it could grow tax-free and you're free to invest it in whatever you want. I'm actually going to buy 9 shares of Alibaba. Shoot, it went up while we were talking. I'm going to buy 9 shares of Alibaba. You guys could check this out right over here. So you guys can see I'm not making it up. Right over there, $1,552 is going into Alibaba. There it is. Okay, so we got Alibaba. 9 shares have been purchased. I'm very happy about that. I'm going to place a new order, and I am going to buy Hasbro. So I'm typing in Hasbro. I'm going to buy just a few shares of Hasbro right now. It's going to be 5 shares, so this is a smaller position. But I just want to diversify a little bit further into kind of like toys and gamings, because no matter what, toys is something that people always want to have for their kids. So this is almost like a essential good, right? It kind of trades like that. There's a market crash. You see a lot of correlation with things like Hasbro and Walmart. Because that's essentially what they provide, is this kind of outsourcing of labor for parents. Is like, here's this toy. But also, there's a lot of collections that are happening because of Hasbro, such as My Little Pony. Like, you should see the 50-year-old dudes who are buying My Little Pony toys, right? No offense to them. If you're one of those dudes, like, more power to you, because those toys do go up in value, and it can be seen as an investment, depending on your framework. Also, Magic the Gathering, right? They have Magic the Gathering under their wing, and one card from Magic the Gathering, the Black Lotus, graded 10, just sold for over $500,000. So Hasbro is kind of this machine that creates these collectibles that, if the market chooses to, may value in the millions one day. So I would rather buy the company, because I don't know Magic the Gathering that well. I don't know My Little Pony that well. So I'll just buy the company, and hopefully it goes to the moon. And if it doesn't, that's why it's a small position of my portfolio. So next up, I will be buying index funds. And index funds are a very important part of my portfolio, because they own about 500 different companies. Today I will be buying VOO if I have enough money to buy it. Oh my gosh, I don't have enough money to buy it, so I'm not going to be buying VOO. And you could see I don't have enough money to buy it because it is around $412 for one share, and I only have $358 left. And over here, Paula Will knows a lot about bronies. So those are the people that are, I guess, dudes who buy My Little Pony stuff and collect it. It's a whole culture, I'm telling you. That's why I invest in these subcultures, because I believe there's a lot of power there. There's a lot of power there. I talked about ARK earlier on, and why I do not like ARK, because you can buy those stocks individually on your own. So I'm going to submit this order right now, and I bought my VTI index fund, which is the top 3,500 companies. Unfortunately, I can't break the last $100 because I'm on an older platform. And the reason I'm on an older platform, one without fractional shares, is because fractional shares did not exist when I started investing. That's pretty much the reason why I'm using Merrill Edge. Back then, they gave me 10 free trades per month, and that was all that I needed. Nowadays, that seems almost like such a terrible thing to hear, especially if you're investing in the United States of America, where investing is free and you could just go for it. So, yeah. AMC, I used to have AMC. I sold my shares at around $59 or $60, or maybe $55. We know that AMC just touched 30%, and it dropped all the way down to 18%. No, you're beautiful. You're beautiful. So okay, let's see what happened right here. I have $126 left, which sucks. So I might have to buy one more share of Hasbro because I never want money sitting there. I talked about Robinhood in the beginning of this Instagram live, so I will be saving this and I will be posting this on my YouTube so you could check it out over there. And I hope that will be helpful for you, and you could just scan through. There. I'm staying away from Robinhood, though. I do not want to buy it, even if it is just $45 or $49 since we, it went up quite a bit since we started talking, but I am staying away from Robinhood. Maybe it'll go to the moon, maybe it won't, but I'm buying the stocks that I researched right now and kind of not taking a deviation from my path. So I'm buying one more share of Hasbro right over here, so I will have about $30 left over, and I'm okay with that. Next month, I'll just invest $30 more if it'll let me. So I submitted my order, and with that, I am done investing, and now I have to go invest for my mom because she has to invest $5,000 today. And this is her investing day as well. And again, for people joining in, we invest every 24th because my grandma's birthday is July 24th, and that's one way to respect the generational wealth that she created. And no, she didn't leave millions of dollars behind or anything like that, but she did leave behind the values to preserve the wealth. So this is why we invest every 24th on the dot, no matter what. If it's a weekend, we invest the day before or the first Monday after. So that's where we're at. Bree Loves Less says, I wish I had a son. You don't need to have a biological child to kind of encourage the next generation. There is adoption. There is influencing people in your community. I work as a behavior analyst with children on the autism spectrum, and so I feel like I get to impact the next generation with my values without, being related to them or even having them as my children. So there's so many ways to impact the next generation, I think. And with that desire, I think it'll go a lot further when someone like you is really striving to impact like the kids of the next world that humans will create. Anyways, I'm going to show you one last thing here, which is what my account looks like now based on these new sales. So we could go through all of my stocks in just probably just another minute. If you're watching this on YouTube, like, comment, and subscribe, and hopefully join me next month as you see me build my portfolio. So here we are. We see VU, Apple, Disney, Berkshire V, VTI is something, it has an exclamation point because I just bought it. Nintendo, VGT, which is a tech sector, SPY, that's the index. Facebook, Snapchat, Overstock, Square, Costco, Comcast, Abbott, Microsoft, CRISPR, Kroger, Adidas, not Adidas, but Editas, they edit. Jeans, Walmart, Advanced Micro. This is really skyrocketed with the crypto surge. So did Nvidia, and I chose to go with AMD. Lowe's, SPEM, which is exposure to emerging markets, especially China. Johnson & Johnson, Charles Schwab. Like I always tell people, make an investing account on Charles Schwab. I actually bought Charles Schwab stocks. Sony, Etsy, PayPal, Spotify, Alibaba, one of the new ones that I just purchased today. There's Alibaba. Overstock special shares. Sometimes a company gives you a special dividend and in the form of a special type of stock. So this was a really nice gift, and this gift is now worth around $1,500 just for free for buying and holding stocks. Costco does this from time to time. Whoa, I choked on my excitement. Symphony, this was kind of a gamble, but it is doing very well. Match, Twitter, Schwab International ETF, Visa, Sensonics, this is diabetes care. We talked a lot about this earlier. Weight Watchers, Intel, Beyond Meat, Costco, Hasbro, one of the newer ones, PG&E, eBay, Skechers, Carnival Cruise, American Airlines, and finally the consumer goods ETF, which just tracks consumer goods. This is the smallest position, and this was from highest to lowest in my portfolio. You could see the percentages that they all make up right around here, where the highest one makes up around 18% of my portfolio, and that is the Vanguard Index Fund ETF. So if you guys enjoyed this, definitely share with your friends, get them investing. I have an investing course that you all get the coupon to buy. Just send me a DM and I'll give you 41% off. This lasts until next week, so hopefully that's enough time for you to make the decision if you want to buy my investing course. And with that, sending you guys a lot of love. If you have any investing questions, you don't have to buy my course. I will answer them, but I do prioritize people in my investing course, and they get answers real fast. They get audio recordings, and I really sit down and think about their situations. So you might kind of get a throwaway answer, but you're going to get an answer for sure if you send me a DM and you have a question. I really do. I said a throwaway answer, but that was more to motivate you to buy my course. Wink, wink, hint, hint. I usually go all in for everyone, but I do prioritize people who bought my course. And then if you do buy my course, you also get to meet with me once a week on Wednesdays in small groups, and we discuss whatever you want to discuss. And I also have small mini lectures ready where we talk about all things investing. For example, stock market crashes, the biggest crashes, and how to prepare for them mentally, how to prepare for them financially, how to prepare for them sociologically, because a lot of friends are going to be pressuring you to sell your stocks when it happens, and guess what? It's going to happen. When COVID happened, my mom was yelling at me every single day saying, "What are you doing, man? What are you doing? It's COVID. We got Joseph Biden coming into office. Like, things are too shaky." We talked about diversification. We talked about social media growth as well, just a little bit. Here's kind of a little sneak peek of what it looks like. So these are all different modules. Some of them are for investing. Like right here we have day trading and options trading. So we talk about day trading and options trading in this one. Spoiler alert. I discuss how it's done, how it can be profitable, how it cannot be profitable, and these are the mini lectures. So this is not the course. This is the bonus material that you receive after you purchase the course and you come to the Zoom lives. There's bonds and alternative investments as well. And again, this is just an extra little bonus. This is not the majority of the course. The majority of the course is foundational knowledge. And that foundational knowledge is what you need to actually start investing, be confident investing, and build your own portfolio with your own values and pass those values on to the next generation if you choose so. One of my favorites, here's actually a condensed version of the course right here, is what it looks like, history and pairing. So yeah, a lot of cool little clips right here, and you will, when you buy the course, you will have me in the corner explaining each one and how I apply it to my life and how you can apply it to your life as well. So I hope you guys enjoy that. I definitely think I provide way more value than the course actually costs, and that's something that I love doing. I give more than I'm asked for. No one thought that they would get like Zoom nights and they could come whenever they want to. So yeah, and this is the last thing I'm going to show you guys. This is what the course actually looks like. So retirement accounts, index funds, ETFs, market crashes, introduction to stocks, introduction to wealth management. What does that say? Do not delete. This is dividends and individual stocks. How to get, we compare dividend aristocrats to the index fund. By the way, Lowe's, a $1,000 investment in Lowe's, $22 million, compared to an index fund at $60,000 after 45 years of investing. So some individual stocks really outperform the market. And then finally, how to be lazy and wealthy. And with that, if you're interested in the course, definitely send me a DM and I will answer you back within 24 hours with a coupon code for the course. All right, with that, peace out, Girl Scouts, no doubt. Got more raps on the way.